GM. Monday, 15th of April. And today, we're going to look at complacency bounces, how you can spot them. So it's sort of a mini lesson today. Because we've had the fear-driven sell-off, which of course you should not panic and sell the lows. And then on daily levels, I talked about if you want to sell, now is the time to consider it. Not when everyone's panicking, but when everybody thinks, oh, we're okay. So that's where complacency can set in. Now, I'm not saying that is the case for the market. I'm not saying we will go lower. But as a trader, it pays to be on the lookout for these type of setups. So one of the first things you'll see, if you think this could be over, whatever altcoin you're looking at, it needs to have lost its trend. So you can see here on Solana that it pushed up into the highs, consolidated on the daily bands, then broke structure and broke down with the bands turning red, ripped down through the 50 and is held at the 100 EMA. So right now there's three major signs of weakness. One being that it broke down from this swing low. So push up into the highs, set a low, consolidated here, broke that structure. So that's one downside move. If you're looking at that as being part of the downtrend, you would have a high to a low, to a lower high, to a lower low, and so you'd be expecting a lower high to form here if Solana is going to go lower. So a lower high to form somewhere on this bounce. So that's the first part, breaking that level. Second, bands are red, right? So the trend bands have officially flipped bearish, with the bands being red. Third, it broke through the 50 EMA, which it held, and this is where context is important for the specific coin you're trading and the specific trend that it's in. Every coin is different, but you want to look at them as in Solana is going to do its own thing compared to the rest of the market, because there's a different set of buyers and sellers in Solana than there is in other coins. So whoever was doing the buying all the way from October, and remember Solana's been the leader of the market, certainly of the altcoin market, the daily bands provided perfect dip buys all the way up. Okay, then the daily bands flipped red, briefly, but the 50 EMA held. We had a 1, 2, 3 day dip below it, just a quick trap, back above, and then the bands green again held, 50 held, 50 held, bands green, holding all the way. So for 6 months, 6 months, Solana never had to go below the 50 EMA. Now it has. It has gone significantly below it. In fact, it failed to hold it. So it tried to hold and that failed. And we went all the way down through it, right down through the 100, and now closed above the 100 EMA and is holding at that level. But you have to apply the context of Solana has not done this in its entire trend. So you can look at that, but this is where bias can come in. If you want to be long and you're long biased, you'll say, oh, healthy reset into the 100 EMA. We'll say, well, with what context? In the context of this entire trend, of which Solana has been in, it has not come to this level. It has not shown even a willingness to get there. In fact, there was so much demand that it would front run. So my question would be, why has the demand disappeared to the point where Solana not just went to the 100, but went right through it, almost to the 200 EMA? Is that a sign of a strong market, or is that the sign of an early stage downtrend? Or at least a choppy phase? All of these questions are just hypotheticals, but you have to apply that kind of logic to it. So back to the weakness. One sign of weakness, breaking there. Second sign of weakness, bands flipping red. Third sign of weakness, not respecting the previous trend. Yeah, didn't respect the 50 or the daily bands. So there's three areas there, three reasons to believe that Solana has shown weakness. Now, at this point, this is where most people fuck up the selling a complacency bounce. They try and apply a reasoning for why Solana is now bearish. This is not about bearish or bullish. This is about probabilities. So there's two paths I've drawn out, which are the most likely. One is where we spend the next 4 or 5 days stuck, really between the 50 and the 100, and not able to get through this bearish order block area on the daily, basically the origin of the breakdown, and it chops and chops and chops, and it tries to push into it once, twice, three times. It tries to push a few times into it, is unable to. If you look back at Solana, and this isn't drawn to scale for time, if we look back at Solana maybe a week from now, and it's still kind of chopping around 140 to 160, that's a sign that it's going to go lower, most likely, probably down into a new low, and then set a bottom from there. The alternative is that we have a shorter correction here, and then it rips through all of this up towards the high, but not through it. Doesn't break through it. Comes up into resistance at the highs, and again spends a few days around there. And if you start to see it forming on a lower time frame, something like this, under, where it tries to push above, break structure on the low time frames, retest at that area, that is the second time where you should take profit or sell or whatever. Depends how you want to approach it. It depends on the context of which stage of the market you're at too. For me, this would be somewhere that I would sell my altcoins back into Bitcoin, because I don't think the market is over. But if I think that the market's going to go lower, and maybe Solana's going to make a new low, or it's going to revisit the lows, and I want to be in Bitcoin, not Solana at that point, because Bitcoin's structure is stronger, it's a bigger asset, it's held up better, it does better in war conditions if it's about war, it does better in inflation environment if it's about inflation, then, and you don't think the bull's over, then you swap back to Bitcoin. That's why Bitcoin dominance is rising at the moment. People are swapping back into BTC. You saw this very clearly at the weekend. Why was Bitcoin down 6%, 7%, and most alts were down 60, right? The lower cap stuff. And 30, 40, 50 for the other stuff. Because people were swapping their alts back to BTC. We all know the game now. And that's a really bullish sign in one sense, because it means people, at least a decent amount of people, were swapping back into Bitcoin, not into dollars. That tells the sentiment of the market, and it believes that the bull is not over. Bitcoin is still destined for higher. So I want to be really clear about this selling, complacency bounces, etc. If you want to sell back into dollars, that's fine, but you have to have a view of the market as a whole. And for me, if this happens, if I see the red path or the green path, I would be swapping back to Bitcoin for my alts. Now, I don't hold Solana at the moment. I closed out my Solana trade. I'm just holding Bitcoin, and then altcoins like Akash, Bowden, Trump, Apu, mostly some of the smaller meme coins. If I want to take profit on some of those, because they're all in profit, if I want to take profit on the next bounce, it'll be based on this exact same kind of logic. Now, the last part of this, the most important part, is you need to sell as high as possible in your specific range. Meaning, so the first breakdown on Solana, and I'll take off the indicators here, the first breakdown level, and then this order block, just drew it across a daily. This is the obvious place where Solana will retest. Okay. Now, if you're going to sell, and it pushes up into here, and then rejects back, and you start to sell there, it's too late. You can't sell there. That's not a complacency bias. You're selling halfway down. If it pushes into this area, and you have your rule, right, go and back test this. If it's not able to push through this area on the first 3 days, whatever, go and test some rules, then you sell. But sell in the box. The reason for that is because you have to be able to get back in if you're wrong. Right? This is important too. You're not selling to say, I'm absolutely right, the market's definitely going lower. Nope. You're selling here because it gives you the highest probability. If you're wrong up here, it's very easy. It'll go like that, it'll flip that area, and you can get right back in. And you might sell at 165, you can get back in at 175. It gives you a very easy re-entry. Exact same up here. If it comes right up into the resistance and shows the weakness that you'd expect to see, and you sell around 190 or whatever, super easy to get back in, because if it flips 200, you're back in. It's giving you the highest probability. You should be selling at a point where if that resistance is legit, down we go, and we go significantly down. So your downside for not selling at 190 is all the way back to 130. That's a big downside risk, because if that resistance holds, that's where it's going to go. If 165 does not get flipped into support, it's going back to 120. But if you sell at 165 and you're wrong, you can get back in at 175. So it's only a $10 move to get back in, but if you're correct in de-risking, it's a $45 move down. Right? And that's why you can apply the same logic of a regular short. If you sold there, but you're getting back in at 175 if it flips it, right? Your upside 5.3. Now, I don't recommend taking shorts in these environments unless you have a system for it. This is more talking about panic-driven sell-offs. Do they lead to a bottom and a new high, or do they lead to a complacency bounce before new lows? And finally, I'll do it on a couple other coins. And this is not about saying that this is definitely a complacency bounce to sell. I know that might be how people interpret it, but it's not. I don't think the bull's done. I think some of this stuff has had really strong reactions, like such as Bowden. I think this can rip way higher, but also, is it in a complacency bounce? Well, then we zoom in, go to a lower time frame, look at something like maybe a 12-hour, right? So you had this move all the way up, took out the highs, sort of a head and shoulders type of formation there. You had this trend line rising up, you got the 500 million market cap level, and you got the $1 round number. And it's pushing back up into this resistance where previously it broken down from. If I see price hovering around here for 2 or 3 more days, I'll probably take some profit off, because that means it's quite likely to drop back down. Right? Because that would be a textbook complacency bounce. You drop all the way down, you rally up, it's unable to reach back to the level it came from, and away down it goes. Now, if you want to get even more granular with it, go and look at the exact breakdown levels. So, for example, on Bowden, the breakdown really originated from here. This was the last point where it tried to hold the 50 EMA. I tried to hold, impulse lower, and then that went into our second leg down. Now on the rally, we've retraced all the way back up to this point and filled it back in. So that's a good sign of strength. Most coins have not returned back to their pre-dump levels. That's strength. But also, it's right at that level. What you want to see is it pushing higher to show that not only was the shakeout not bearish, but it was bullish and bought up by people who are stronger hands than what was in before. If you're looking at other coins, same thing applies, right? You're looking at where does it come to on the next bounce, right? You've had a deep wick as someone panic sold. It's bounced all the way back up, and it's trading higher than it was 4 days ago, right? So on the 9th, 5 days ago, it's trading higher. So if you ignore that wick, especially on these volatile low cap meme coins, not low cap, but low to mid cap, less liquid coins at least, that was just one person selling. One guy dumped 800k in panic and caused that massive wick. Where does it actually end up? Here, and end up consolidating. So it's consolidating higher. Line chart, that's a rising uptrend. That's not even a deep correction on the uptrend. It's a nice, like, healthy correction, right? Consolidate, 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 break out, push up, break out, dip back at the bands. That's not a bearish chart. Now, what could make it bearish? Again, a bounce up into this previous level. So if it attempts, so it's just consolidating here. If it attempts to go higher and is unable to, right? Very simple. Probably something like the 200 mil market cap level for a poo, because that's round number, right? Round number of market cap. Push up, fails at that level. That's when you're expecting it probably going to go down and fill the wick and have to go sideways and consolidate before any further moves up. I don't think any of these are done. I think Bowden goes much, much, much higher. I think Apu goes way higher. I think Trump goes way higher. I think all these coins go much higher this cycle. But these moves can lead to significant corrections, right? Take this for example. This was Trump's first big rally. Sell off, complacency bounce, goes lower, pops higher, drops back, tries to go again, bleeds all the way down. And time wise, so from that first sell off into the bounce, so from the top of that first complacency bounce, time wise, it took another 37 days to bottom out, and it went down 71%. That's a significant amount of time to have your money locked up in a coin if it's not performing, and it's a significant amount of drawdown, 70%, which can be avoided. But you only sell if you get the rally. You only sell on the way up. You can't sell these things on the way down. If you saw this and then it starts to go here, you don't sell there, because guess what? You're then selling on the way down. And what happens? It dips a little bit lower, and you get even higher chance. You get even higher prices. It even goes up once more, and then comes back down, and then goes once more. The patience is required. This is why the people panic selling the first dip are not going to make it. It literally gives you 1, 2, 3 chances to get out if you wanted to. And that's on a daily chart. All you have to do is actually take one of those chances and have an opportunity, have a level at which you're going to get back in, right? So if Bowden chops around here, tries to push and is unable to get above 90 cents and then drops back, and then tries 90 cents again and drops back, sell some. Because then what do you know? You know your re-entry is $1. Right? 90 cents to $1 is where the big resistance is. If it tries and tries and tries and fails, get out as close to 90 as you can with some of your, you don't have to sell your whole bag, sell some of it. And then, when it flips the $1 again, get in. Take the signal from the market and you'll do better. That's it. GM.